All right, this is Market Outlook 10, Week 10, number 2, starting with the British Pound Futures, going out to the 4-hour time frame. Like I said before, we were looking for a little bit more price action to assess if we were going to continue looking for buys in the current impulse. I said that we could be we could be looking at the transition of the impulse phase to the pullback phase if we were to establish a price leg. And in order to do so, we would need to take out this high here. We have yet to do that. What we have seen is a response from this area of interest here. On the 4-hour time frame, we've mitigated 100% of it, and now we've given a nice little response from here. But I'm really skeptical based off of this response. I don't know. I'm just intuitively skeptical, and so what I'm looking for is if this is going to hold an opportunity to trade. To catch the response based off of the price action that's been presented here to continue lower, to continue this impulse, or for the next thing would be just potential, or the next thing would be a pullback to take out this high, and then we would look for the price leg to form, which would be based off of something over here. That's what I'm seeing on 6B currently. On gold, we're actually looking for a response from this area of interest. I know a lot of people were looking for gold to take out all-time highs. But remember, we had already established that we are inside of a range. So even though our area of interest failed, and just because, we got some sort of mitigation of inside of this wick that's irrelevant to me, all I see it as is just price action and it's just a range being a range. I'm just going to chalk it up to I can't really make sense of this price action right now as far as it mitigating past our area of interest. And really, technically, it hasn't, completely falsified our area of interest as it didn't run the high. So that is still, respecting our area of interest. But as far as the entry that we were looking for, it just wasn't valid in per se. No, not per se, it just wasn't valid. So what we're looking for now is, a response based off of the run here to take out, multiple lows. We're looking for a price to pull back to mitigate something inside of here and then look to go lower, going towards the discounted side of the range. All right, on the NASDAQ. Okay, so a couple things have happened. Let me go ahead and get rid of that. We talked about the draw on liquidity here. We have the run, multiple runs. We have draw on liquidity actually now here as well. We've drawn liquidity multiple times on two relatively equal lows here. And so that is an action. And so like we said, once we get draws on liquidity, we usually get reversal of price action. And that is exactly what ended up happening here, where we ended up running the high that actually led to the mitigation or the purge of these lows here, of these liquidity points, and now we've run that. So now what we're looking at is potentially what is going to happen now. Because we have that liquidity draw is now, not relevant, that one's not relevant. The main liquidity draws that are relevant are this one and this one. And so we've now just run the high that took out this previous high. So we need to see if we need to see with, future price action, is this going to be a draw on liquidity or a break of structure? And I say break of structure of this internal run here inside of this range, or this price leg / range. Is this going to be a break of structure? And if it is a break of structure, as in you see that we did close above it, but I would like to see, this candle close a little bit, or this next candle close higher, or move higher. I guess, well, the next candle, not this one here because it's already closed, but the next candle, I want to see if this moves higher, or do we just continue the price action down lower from here. I do see that we have an area of interest here. Every time. I do see we have an area of interest here, but it's not really, relevant to me because it doesn't really mitigate a previous inefficiency object. Yes, we have this draw on liquidity here of this high, or not this high, but of this high here, but that doesn't necessarily mean that this is a sponsored candle or an area of interest. So this price gap / area of interest on the 4-hour here, I don't really see it to be any, stronger, which is why I'm relying on the action and the price action that occurs here after mitigation or purging of this high here. So that's why I'm not using, that as a area of interest. I do recognize it as a price gap, but not a valid area of interest for me to look for opportunities on. So it's either action is going to give us a liquidity draw and we begin to move lower, in which we would look to target, our next low and then possibly that low and that low, or yet again, we'll be stuck in limbo or liquidity draw purgatory, and we'll be looking to take out this high here. Just still chugging along here inside of this range on the NASDAQ. It is what it is. We're just building up a lot of liquidity. Be careful. All right, silver, nothing. And now the Dow Jones. All right, so in the last one, we talked about we would now need to look for defining the range for the Dow Jones or for YM, because we had broken the price leg that was sustaining the bullish run. So we transitioned phases from run to range on the macro perspective. I'm not going to explain why we marked it up, but this is our range that we're looking at. Characteristics of it: we now have a low of the range, we have a high, so we have a structural point, liquidity point, and we can see that this range does resemble something of a range based on the sensitivity and price action around equilibrium. That is one of the markers or indications that I use to validate the selection of my range. Is I really want to see a lot of sensitivity within, plus or minus 5% of equilibrium. So if we're at 50%, so say go like 50%, go up 5%, 50%, go down 5% from that. And you can see that there's a lot of sensitivity, a lot of consolidation around that, which verifies or validates to me that this is a range from a price action perspective. So now that we're in the range, now we're just looking to catch trades and opportunities based off of the price action provided. Granted, like I said before, when I'm in a range, I target the nearest 4-hour liquidity point and vice versa, or the nearest 4-hour liquidity point, and that's just the way I like to trade ranges. Do as you please. So currently, the price action, once we got this break of structure, we'll clear this out. We had this liquidity draw here, and that liquidity draw led to the run into the break, that led to this next run here. So because of that, we have a mitigation of an area of interest, and so now we're looking for opportunities to catch sells to move lower. If not, what we could see is this right here, this price action is potentially a draw on liquidity, and so if this is a draw on liquidity, I'm skeptical of it, only because we have the closures are very pronounced, and I don't know. This just seems like a very pronounced move to push lower. I don't know if I want to consider this a draw on liquidity based off the action, or based off of analyzing the action here. I'd like to think of it more as a break of structure, and we've generated, a high low, and we're looking for a pullback to mitigate this area of interest to continue lower. That's how I'm seeing it, but I would not be surprised if we do fail this price gap and continue to take out this high here, and then we would look for an action that occurs at this high. Is it going to be a break of structure, or will it be a liquidity draw? Now, the other thing that I am, looking at here, and the reason why I'm skeptical of that being an action, is the fact that previously I liked that this candle mitigated a previous inefficiency object in which it was this price gap here. And so what I'm seeing is essentially just continuation of bearish price action, where we have, the high that ran the low, then we got a pullback, and that 50% mitigated that, and that's what ran to the next low. So what I'm looking for is a similar sentiment, is where we get this pullback here and we mitigate this area of interest, and then we get the exact same response. That's what I'm seeing right now based off of the price action given. So That's pretty much what I'm seeing. If that fails, then I'll know that that's a liquidity draw, and it is what it is. I mean, all the price action here is pretty much balanced anyway, and inside of this area of this high down to this low, all the price action is balanced. The only thing now would be to look for executions on the lower time frames for continuation of sells, or we fail and we see price run this high. But because we're in the premium side, this is in the premium side of the range. I'm very convicted. I have high convictions, not convicted. I have high convictions that we would get selling opportunities here when the market opens back up. If not, well, then we'll look to see and play the future price action. All right, that's it for week 10, outlook number 2.